In a significant rebound, Bitcoin has reclaimed the $90,000 mark for the first time since early March, reflecting a growing trend among investors seeking refuge in cryptocurrencies amid the backdrop of a turbulent stock market and a declining US dollar. This surge comes as Bitcoin's price climbed to $90,282, marking a more than 7% increase over the past 2 days and peaking at $91,555.18 earlier in the session, its highest point in over a month. Bitcoin's recovery is accentuated by a 22% rise from its April lows, suggesting a renewed confidence in the cryptocurrency amidst broader market instability. This resurgence in Bitcoin's value is occurring alongside a notable sell-off in U.S. equities, driven partly by former President Donald Trump's escalating pressure on Federal Reserve Chair Jerome Powell to lower interest rates. As investors navigate these uncertainties, inflows into U.S.-based exchange-traded funds ETFs linked to Bitcoin have surged, with $381.4 million entering the market on Monday alone, the largest daily inflow since January. Analyst Ed Engel from Compass Point remarked, "Bitcoin continues showing signs of resilience, highlighting a decoupling from traditional risk assets that have historically influenced its price. The connection between Bitcoin and equities has historically been tight, often reflecting a correlation close to 1.0 during macroeconomic sell-offs. However, recent data indicates that this correlation has softened to approximately 0.65 over the past month, suggesting that Bitcoin may be forging its own path in the current financial landscape." Engel noted that while this decoupling is encouraging, the market's current strength is accompanied by lower trading volumes, which complicates predictions about sustained upward momentum beyond resistance levels around $93,000. Katie Stockton, a chart analyst at Fairlead Strategies, identifies the $88,000 price point as a crucial resistance level for Bitcoin. A successful breach of this threshold could pave the way for further gains, potentially targeting $95,900 in the near term. With Bitcoin's long-term holders continuing to accumulate, the cryptocurrency appears well positioned to withstand ongoing volatility in equity markets. In contrast to Bitcoin's bullish sentiment, there remains skepticism about the broader cryptocurrency market. Financial guru Dave Ramsey recently advised a caller on The Ramsey Show to sell her crypto holdings to pay off debts, emphasizing the extreme volatility of cryptocurrencies. He argued that while the caller believed she was following divine guidance to invest in crypto, the inherent risks associated with such speculative assets warrant a cautious approach. This perspective highlights the dichotomy between retail enthusiasm for cryptocurrencies and the more conservative view that emphasizes financial prudence. As Bitcoin continues to navigate these complex dynamics, the cryptocurrency landscape is also experiencing regulatory pressures, particularly from Europe. The European Central Bank (ECB) has expressed concerns that the US's aggressive promotion of cryptocurrencies could destabilize European financial systems. The ECB is advocating for a revision of the Markets in Crypto Assets Regulation (MiCA), which was designed to provide robust safeguards for cryptocurrencies in the EU. The potential influx of US stablecoins into Europe raises alarms among policymakers who fear a loss of control over their financial systems. The clash over cryptocurrency regulation is emblematic of larger geopolitical tensions, with U.S. policies potentially reshaping the global financial landscape. As President Trump and his administration continue to embrace and promote cryptocurrency, the implications for both U.S. and global markets remain profound. Looking ahead, the interplay between Bitcoin's increasing acceptance as a store of value, the ongoing volatility of traditional markets, and the evolving regulatory environment will shape the future of cryptocurrencies. Investors and stakeholders will be closely monitoring these developments to assess their long-term impacts on the financial ecosystem. In a remarkable turn of events, Bitcoin has surged past the $90,000 threshold, marking a significant moment for the cryptocurrency as it responds to a confluence of macroeconomic pressures and shifting market sentiment. trading at approximately $90,995.01 midday on April 22, 2025. Bitcoin's price has seen a considerable uptick of over 3.95% in the last 24 hours alone, extending a bullish trend that commenced late Sunday. This sudden spike has reignited enthusiasm within the crypto markets, prompting analysts and investors alike to scrutinize the underlying factors driving this momentum. One of the primary catalysts for Bitcoin's rally is the notable weakness of the US dollar. The dollar index recently plummeted to a multi-month low, particularly following President Donald Trump's public criticism of Federal Reserve Chair Jerome Powell, wherein he called for immediate interest rate cuts. This political pressure has instilled uncertainty within the currency markets, nudging traders toward alternative assets like Bitcoin. Marcus Lin, a senior analyst at Crypto Macro, noted Trump's comments have traders pricing in deeper rate cuts. That's bullish for Bitcoin. Additionally, the surge in institutional investment has played a pivotal role in Bitcoin's ascent. Data from CryptoQuant reveals that over $300 million in net inflows were recorded into spot Bitcoin ETFs on Monday alone, with prominent funds such as BlackRock's iShares Bitcoin Trust and Fidelity's FBTC leading the charge. The strategy ETF added a staggering 6556 BTC to its holdings in just 24 hours, highlighting a growing appetite among institutional buyers who are outpacing miners in accumulating Bitcoin. This imbalance in supply and demand has inevitably exerted upward pressure on the cryptocurrency's price. The technical landscape for Bitcoin also appears to favor continued growth. Currently trading well above its 20-day and 50-day moving averages, Bitcoin is exhibiting bullish momentum. Analysts have identified a golden cross pattern which occurs when short-term moving averages cross above long-term ones, signaling potential further price increases. Should Bitcoin breach the psychological resistance level of $92,000, it could pave the way for a rally toward the coveted $100,000 mark. Market sentiment has markedly improved, as reflected in the Crypto Fear and Greed Index, which has shifted into greed territory for the first time since mid-March. This renewed confidence is further evidenced by rising social media buzz and increased search interest for Bitcoin-related queries. Such dynamics indicate a growing optimism in the market, with altcoins like Ethereum and Solana also benefiting from the newfound enthusiasm. Looking ahead, several key events could shape Bitcoin's trajectory in the coming days. Federal Reserve speeches scheduled for this week are expected to provide insights into potential rate cuts, which could further fuel the current rally. Additionally, sustained institutional interest, as evidenced by ETF flows and trading volume, will be critical to maintaining momentum. However, investors remain cautious of unexpected geopolitical or macroeconomic developments that could swiftly alter market sentiment. As Bitcoin continues to navigate this tumultuous landscape, it stands at a crossroads, balancing on the fine line between exuberance and caution. With a current market cap of approximately $1.76 trillion and a 24-hour trading volume of $38.9 billion, Bitcoin's latest performance underscores its resilience amid broader market volatility. Should the current momentum persist, analysts are optimistic that Bitcoin could reach new milestones, with the $92,000 mark appearing increasingly achievable in the near term. In summary, Bitcoin's recent surge encapsulates a perfect storm of economic trends, institutional investment, and technical indicators. As the cryptocurrency landscape evolves, stakeholders will undoubtedly keep a close eye on forthcoming developments that could herald further growth or unexpected challenges. In a bold move that has ignited controversy and debate, President Donald Trump recently announced the launch of a new cryptocurrency, the Dollar Trump meme coin, just days before his anticipated second inauguration. This announcement has not only raised eyebrows concerning the ethical implications surrounding a sitting president's involvement in cryptocurrency, but has also drawn criticism from legal experts who worry about its potential for misuse. Critics, including Senator Chris Murphy from Connecticut, have voiced concerns that Trump's cryptocurrency could facilitate illicit financial activities. Murphy took to social media alleging that the coin could serve as a backdoor bribery scheme enabling CEOs and foreign oligarchs to funnel money to Trump in exchange for political favors. Senator Bernie Sanders echoed these sentiments, warning during a CNN town hall about the risks of a direct financial connection between the president and potential donors through the coin. While legal analysts acknowledge that such scenarios could indeed arise, they also stress that there is currently no concrete evidence to substantiate these claims. The transactions can clearly facilitate donations that exceed the legal limits for U.S. citizens and corporations, and they can facilitate donations by foreigners which are illegal, noted Frank Emmert, a law professor specializing in blockchain and digital currency law at Indiana University. He emphasized the necessity for thorough tracking of cryptocurrency transactions, a task that specialized government units are equipped to handle. The White House has responded to these allegations through spokesperson Anna Kelly, who asserted that Trump's assets are managed in a trust overseen by his children, claiming that there are no conflicts of interest. However, critics argue that the lack of clear financial barriers between Trump's political role and his personal financial ventures raises significant ethical concerns. Reports have indicated that, unlike during his first term, where he divested holdings to mitigate conflicts, Trump has not taken similar steps this time around. The dollar Trump coin, which is categorized as a meme coin, a type of cryptocurrency often initiated as a joke, has already gained notoriety for its volatility and perceived lack of substantial value. Following its launch, the coin's worth skyrocketed from a mere $1.21 to an astonishing $75.35 in just 2 days, only to plummet dramatically since then. As of now, the dollar Trump token is valued at around $8, reflecting a staggering drop from its peak and resulting in significant financial losses for investors. Despite these setbacks, the coin's recent performance has shown a surprising uptick. Following a token unlock event that released 40 million tokens into circulation, the coin unexpectedly surged by 10%, defying analysts' predictions of a price drop. This increase in value has been attributed to the apparent restraint shown by Trump-affiliated companies, which hold 80% of the tokens and have yet to sell their newly unlocked shares. The implications of Trump's foray into the cryptocurrency market extend beyond immediate financial concerns, touching upon the complex regulatory landscape governing political donations. The Federal Election Campaign Act restricts contributions to political candidates, yet the anonymous nature of cryptocurrency transactions could facilitate circumvention of these regulations, a concern echoed by legal experts. As the market continues to react to Trump's ventures, the cryptocurrency landscape remains fraught with uncertainty. Analysts warn that the speculative nature of meme coins like Dollar Trump makes them highly risky investments, often devoid of real-world utility. With plans for further token unlocks scheduled until 2028, the future trajectory of Trump's cryptocurrency remains in question. In conclusion, as discussions about the intersection of politics, ethics, and cryptocurrency evolve, the ramifications of Trump's new venture will likely influence regulatory discussions and investor sentiment in the crypto space. Observers are left to contemplate not only the financial implications of the dollar Trump coin but also the broader ethical considerations of a political figure profiting from a digital asset in an already tumultuous financial environment. The coming months will be crucial in determining how this controversial venture unfolds and what it may mean for the future of political fundraising in America. In a significant shift within the cryptocurrency landscape, Galaxy Digital, a prominent crypto asset manager, has executed a staggering trade involving over $100 million worth of Ethereum ETH for Solana SOL. This move has sparked discussions among industry analysts and investors alike, raising questions about Ethereum's future viability and the potential implications for its market position. Ethereum, which has faced a challenging year with its price plummeting nearly 45%, has been the subject of increasing scrutiny. Despite this, some analysts believe that the second largest cryptocurrency by market capitalization could still double in value by 2026 if certain conditions align favorably. Alex Carchidi of The Motley Fool outlines several reasons that could contribute to this potential rebound. He notes that Ethereum's current sentiment is so negative that it may pave the way for a turnaround, especially if the anticipated Pectra upgrade successfully addresses some of the chain's lingering issues. Moreover, the Ethereum Foundation recently underwent a leadership change, appointing new co-executive directors who may bring fresh strategies aimed at reviving interest in the platform. The community hopes that this new leadership can effectively implement plans to enhance Ethereum's scalability and overall ecosystem, which has been crucial for its long-term survival. In contrast, the emergence of Solana as a formidable competitor has further complicated Ethereum's prospects. Solana's network is often lauded for its speed and low transaction costs, making it a more attractive option for developers and users alike. This competitive pressure is significant, especially as Galaxy Digital's recent trade signals a strategic pivot from Ethereum to Solana, potentially marking a shift in investor confidence. Adding to the complexity is the rise of XRP, which has begun to eclipse Ethereum in terms of fully diluted valuation (FDV). Recent data indicates that XRP's FDV has reached $210 billion, surpassing Ethereum's $196 billion, suggesting a growing market confidence in XRP's prospects. This shift is underscored by a notable increase in XRP's market dominance, while Ethereum's has declined dramatically, hitting historic lows. Investor sentiment has also been more favorable toward XRP recently, buoyed by positive developments such as the acquisition of Hidden Road by Ripple and the launch of the first institutional XRP investment fund in Asia. Meanwhile, Ethereum continues to face headwinds, including criticisms regarding its centralized nature and performance issues, which have hampered public perception. The cryptocurrency market is notoriously volatile, and while Ethereum's challenges are apparent, the potential for a turnaround remains. If the Ethereum Foundation can capitalize on its upcoming technology upgrades and rebuild investor confidence, it might stave off further decline. However, the growing traction of both Solana and XRP presents formidable challenges that could reshape the competitive landscape in the near future. As these dynamics unfold, stakeholders will be watching closely. The next few months could prove pivotal for Ethereum as it seeks to regain its footing in a market increasingly dominated by emerging alternatives. The outcome of these developments will not only affect Ethereum's future but could also redefine the broader cryptocurrency ecosystem as investors adjust their strategies in response to shifting market narratives. Upexi, a consumer products company venturing into the cryptocurrency space, has announced plans to raise $100 million with the primary aim of accumulating Solana SOL, a rapidly growing blockchain platform. This decision reflects a broader trend among corporations to diversify their asset portfolios by integrating digital currencies into their treasury strategies. The fundraising initiative was disclosed in a press release on April 21, 2025, and is expected to close on or about April 24. Subject to standard closing conditions. The company intends to allocate approximately $5.3 million of the raised funds for working capital and debt reduction, while the remainder will be dedicated to establishing treasury operations focused on Solana. Upexi's move comes as part of a strategic effort to navigate the evolving financial landscape where traditional assets are increasingly complemented by digital currencies. Brian Ruddick, head of research at GSR, the lead investor in Upexi's private placement, emphasized the significance of this investment, stating, "This investment highlights the growing demand for efficient, secure access to high-quality crypto assets in public markets." He pointed out that Solana's attributes, speed, scalability, and an active developer ecosystem, position it as an ideal candidate for long-term growth. Lily Liu, president of the Solana Foundation, echoed this sentiment, noting that the partnership illustrates a rising interest in leveraging Solana for real-world financial applications, bridging the gap between traditional finance and decentralized finance (DeFi). Upexi's move aligns with a burgeoning trend where companies across various sectors from MicroStrategy to GameStop are incorporating cryptocurrencies into their balance sheets as both investment vehicles and transactional assets. For instance, Janover, a platform serving the commercial real estate industry, recently announced its intent to enhance its digital asset holdings in the Solana ecosystem after raising $42 million through a convertible notes offering. In parallel to Upexi's announcement, DeFi Development Corporation has also made headlines by purchasing approximately $11.5 million worth of Solana tokens. This acquisition, which increases its total holdings to 251,842 SOL valued at around $34.4 million, is part of the company's newly adopted treasury policy that emphasizes long-term crypto asset accumulation. The immediate staking of these tokens aims to generate yield while contributing to the security of the Solana network, indicating a strategic pivot towards integrating digital assets into corporate strategies. Moreover, Snow Lake Resources Limited has unveiled a strategic growth initiative targeting investments in Solana and clean energy technologies, showcasing a commitment to diversify its portfolio. This initiative not only aims to strengthen the company's balance sheet but also aligns with global trends towards electrification and the rising demand for clean energy solutions. As these developments unfold, they underscore a significant movement within the corporate sector towards integrating cryptocurrencies into mainstream business models. The implications of such strategies extend beyond mere asset accumulation. They reflect a broader acceptance of digital currencies as viable components of financial portfolios. As traditional companies increasingly embrace the potential of blockchain technologies, the landscape of corporate finance continues to evolve, suggesting that the intersection of digital assets and traditional finance will only deepen in the coming years. Moving forward, stakeholders will be keenly observing how these investments in Solana and similar assets translate into tangible benefits for both companies and their shareholders amidst an ever-changing economic environment.